the product market fit for long-term savings with Bitcoin is actually going to increase, not decrease.
Hi everyone, and welcome back to Stephan Livera podcast, brought to you by Bold, the best place to buy and save Bitcoin. Listeners in the US, you can check it out at getbold.io. Rejoining me today is my friend Pierre Rochard. He's currently VP of Research over at Riot, but a long time, commentator and been in the space a while. Worked at different companies and has lots of insight to share, particularly on Bitcoin mining nowadays. I wanted to start with just kind of your updated thoughts on where things are with savings technology. I know this is something you've been promoting for a long time. Where do you see that at these days?
Yeah, so I think that it's the part of Bitcoin that really has product market fit, and I've been thinking about different ways of measuring that. So I actually took the Bitcoin Core node, that's written in C++, the inheritor of Satoshi's, code base essentially, and I plugged it into a SQL database. So I've got it writing out all of the data into a SQL database for me to query because I'm a Bitcoin maximalist, but from a database perspective, I'm a SQL maximalist, in particular Postgres. And so what the metric that I came upon and thought of really last week was looking at the whole UTXO set, which is Bitcoin's balance sheet. It's that snapshot of user balances, although really address balances, right, at a particular point in time. And looking at, so past analyses, myself, and I've seen lots of others do this as well, is looking at how many UTXOs are older than 1 year. Basically, having that be the metric of long-term savings, right, that these coins have not moved. Now, people will come back with lots of technical limitations of this measure, namely that if you move your coins from one cold storage wallet to another cold storage wallet, this metric would make it look like you essentially spent your coins and the long-term savings has been undone, when in fact, from the perspective of yourself, your economic entity, from an accounting perspective, it's still long-term savings. And so it's not a perfect measure. I'd say it's a proxy measure. And what I thought of was, okay, so we're looking at it holding the 1 year constant, but and then saying, okay, 75% of the Bitcoin have not moved in more than a year. And during the bull markets, we see that metric go down, that people pull coins out of their hodl and go and to essentially rebalance their portfolio generally, right? That they want to either put their kids or their nephews or nieces through college, pay off their parents' mortgage, contribute to charity, buy stocks and bonds, which we can have a whole conversation about the wisdom of rebalancing in that direction. Or buy a Lambo, right? Famously, or a pizza. So we see it go down in bull markets, and then in bear markets or kind of in sideways markets like what we have today, it tends to drift up because people have accumulated coins in the past and they're just sitting on them. And so as time goes by, those coins transfer into the long-term savings category. And so the percentage of coins older than a year changes. But what I was thinking was, okay, well, what if we hold the percentage constant? So let's look at the median Bitcoin, that is UTXO by value, not by count. I'll get into why count doesn't work, but by value. So that's essentially, let's say there's 19 million Bitcoin out there. So the 9.5 millionth Bitcoin, how old is it? If we rank order them by age. And that I put together kind of a chart over the past several years, and we'll share it with your audience. But basically, obviously it starts at zero because that's where we all started at zero, and it gradually went up over the past, let's call it a decade plus, right, 15 years essentially, to where now it's 2.5 years. So the median Bitcoin has been held for 2.5 years in cold storage and has not moved. Now, what I like about this measure is that it's not affected by, people might point to limitations of, okay, look, Satoshi, he hasn't moved his Bitcoin. He might not have access to his Bitcoin. There's lots of Bitcoin where the private keys might have been destroyed, and so the people don't have access to them. And I don't think that describes the median Bitcoin. So I don't think that we've lost 9.5 million Bitcoin. So the median Bitcoin is not affected by outliers, either in that direction or in the other direction of kind of the high velocity trading transactional economy.
Yeah.
And it's not a steady up and to the right. So just like with the previous measure, we do see that, for example, in 2017, the median age of a Bitcoin went from almost 2 years, crashing down to less than 1 year. It was basically like 8 months.
Yeah.
And then
I would say, could that also be because of SegWit and a lot of people moving, from the old type of address, that kind of thing?
Perhaps.
Moving from output types, rather.
I could
it's
add
not held
that
in an
to the
address.
analysis because I do have data on SegWit adoption. But my understanding is most SegWit adoption happened in 2020 when blockchain.com added it. Now, that's by count. I'd have to look at it by value. I haven't looked at SegWit by value. You bring up a really interesting point. This is why I love coming onto the Stephan Livera podcast. Makes you think harder, gets you out of your comfort zone. So, and then we, after 2017, we have a steady march up to where now we're over 2 years old for the median UTXO. And my hypothesis is that this is going to continue, this trend, and that the median UTXO is going to continue to get older. Obviously there will be pullbacks when we get a raging bull market and, people are selling, but less and less so. So there's on the high velocity part, if we go into Lightning, I think it's really interesting to look at the age of Lightning channels. So now that we've got quite a few years under our belt, there's Lightning channels. I was looking at Kraken's node since I was had a part in getting that stood up. There's channels still open from the beginning of Kraken's node, like 2.5 years ago now. And so the age of Bitcoin is not necessarily going to indicate the monetary velocity of Bitcoin because those channels could be open for a very long time. But then the payments within those channels could be, recycling those Bitcoin over and over and over, and you don't see that in the on-chain footprint. The other really important factor, I think, is the improvements in cold storage technology. So hardware wallets continue to get better and better. We have, as your listeners well know, we have tremendous improvements on multi-sig that are coming with the ability to use Taproot to have a multi-sig that has a lot more participants in the quorum and also a much more efficient footprint on chain. So, the adoption of multi-sig and hardware wallets will make it such that these coins, it'll lessen the risk of having coins in long-term cold storage, right? You won't feel as strong of a need of, okay, I should move my coins because my paper wallet from 2011 could have JavaScript that's compromised, right? So and that was actually something that was in the news. Feels like recently, but I think that was like more than a year ago. So all that to say that I think that the product market fit for long-term savings with Bitcoin is actually going to increase, not decrease. And so, if you're a builder out there thinking about what's going to get adoption and what should I be building on, I think the long-term savings aspect of Bitcoin is one to really lean into. I don't want to take away from the transactional, payments use cases, because I'm a big believer in those, and I think that adoption is going to continue there as well. But maybe it's just we have to stay balanced. Is what I'd say. Some people want to lean into one direction or the other too much, and there's exciting stories on both ends.
Yeah, that's a good point you make there around, we see a lot of battle. Sometimes it's online, just fighting because people want to fight about hodling versus spending, and they'll be sort of set against each other when in practice, really, if you really truly adopt Bitcoin as your money, you're doing both. You're doing both of these things. And to your point about the UTXO median age, of course, for listeners, we'll flash this up on the video, and it'll be in the show notes. But I think an interesting point will also be that in the Bitcoin economy, if you look at all the UTXOs, there's probably this small group of UTXOs that are regularly cycling around, right? They may be going to and from the exchanges, or maybe they are on some of these swap providers like a bolts.exchange. There's kind of a smaller amount of coins that are rapidly cycling around, because of people trading and earning coins or selling coins, whatever, spending coins. But then on the other hand, as your analysis is pointing out, there's this big hodler, group of people and coins. And so I think that's really the point you're making, which is that over time it's proving it out. And I think it's also fair to point out that if you think about the big bull run years in Bitcoin, right? If you look at 2013, 2017, late 2020 and early 2021, those were the years that you saw this, extreme price moves up. And you could even arguably say even earlier this year, right, where right now as we record this is September 2024, but let's say around February, March of this year, we had very explosive growth. It was maybe 28K all the way up to like 73K or so. Now, nowadays we're kind of hanging around at, 58K, 58K gang shout out there. So I think it's an interesting sort of dynamic there, isn't it? That as you see these explosive upwards moves in the price, you get this kind of rebalancing. So you know what? I think it would be a good spot to talk about your views on rebalancing, because let's say if somebody's coming from a TradFi mindset, they might think, look, Bitcoin has just gone, 3x or 4x. Shouldn't you rebalance? What are your views on rebalancing?
Yeah, I mean, I think that it ends up being a personal finance question. And, that's where I turn to my expert wife, Morgan Rochard, who is a financial planner who understands Bitcoin. They're very rare out there. And it really comes down to big questions like, what are your goals in life? These are really values-based questions. It's not about trying to time the market. I think that's the biggest dichotomy is, are your decisions being driven by others, i.e. the Bitcoin price, or are they being driven by your free will, by what you want your life to be like, what you want, to accomplish? And so if rebalancing is, and I think that it's important to get into these subjective questions, because people will say, and this is a very libertarian instinct of, hey, look, if you want to sell all your Bitcoin and go buy cocaine and just, go on a bender, like that's your right. That's your freedom. You should, we shouldn't have any judgments about people doing that. And my view is we should have judgments about people doing that, because we can very easily know what the consequences of that will be, which is that after they're finished, putting all the snow up their nose, they don't have anything to show for it, and they're depressed and miserable, and they're really unhappy that they spent all their Bitcoin on the cocaine. Like, there's not a scenario where that person has achieved their most fulfilled life. They've self-actualized, and they're very content with their accomplishments. So we should have subjective judgments. Now, what I'll add is, obviously the Bitcoin network will not stop you from selling your Bitcoin, even if it's for bad ends, right? So it really It's more at the social level of, hey, let's think about how can we be mindful about how we spend our Bitcoin. How can we do it in a way that is aligned with human flourishing? That these are philosophical concepts that have been explored for millennia, and Bitcoin doesn't change those. What Bitcoin does is that it helps with the incentives, where now, instead of feeling a need to go out and consume and spend your money right away because inflation is eating away at it, now you actually do have the time to ponder and to reflect and to think about what would be the best way to spend this money, and instead of being driven towards materialism. So I think that it changes the incentives in a rather subtle way. And at a population level, or we could look at it from a marginal economics perspective, that it does change people's behavior, and that's a good thing. I think that we can have a value judgment on that. The other part of it too is that people talk about, oh, Bitcoin's privacy is broken. It's a transparent chain. You can see everything going on it. And then I look at the data. So, to your point about the balance between long-term savings and kind of this high velocity economy, there's about $300 billion worth of Bitcoin being settled on the network every week. So 300 billion a week. So, in a month, you're talking about north of $1 trillion worth of Bitcoin. And granted, some of those might be to like change addresses, right? But I always like to make the point that even if the Bitcoin are going to a change address or it's a consolidation or something like that, where, we're not talking about the exchange of Bitcoin for goods and services, my bigger picture point is that somebody accessed their private keys in order to sign that transaction. And that's a signal, because that means that $300 billion worth of private keys were accessed, right? So it's not like a metric where somebody can fake the metric, inflate it risk-free, right, by spamming the network. No, every time you touch your private keys, there is risk involved with doing that, and you generally do it for a good reason. You don't just do it willy-nilly. And so I think that's an important metric, and people come back and say, okay, well, all right, $300 billion. What are they doing? Where are those Bitcoin going? Like some of them are consolidations. Sure, we can kind of see that on chain. We can, and I've reached out to some of the companies that track on chain criminal activity, and I'm like, hey, do you guys have? They say that okay, only 1% of it is for criminal activity. What's the other 99%? What's going on with that? I get a blank stare in return. They don't know. I'm like, wait, I thought Bitcoin had bad privacy. Like, if Bitcoin has bad privacy, couldn't we get some pretty clear answers about, well, these Bitcoin went to Walmart, these Bitcoin, were cross-border remittances to El Salvador, these Bitcoin, et cetera, were trading. So it's interesting that there's still a lot of unaccounted for or unexplained activity, but the activity is there. I mean, the on-chain data is pretty clear about that. I do think, though, that to your point, a lot of it is rebalancing. And so, when the Bitcoin price goes up, mechanically, some people are going to be selling. And I actually think that when we think about Bitcoin's price, ultimately, the rebalancing is what is the ceiling on Bitcoin's price increases. If there was very little rebalancing, that means that new entrants, right, new buyers of Bitcoin would be competing for scraps, and they would be
and it would shoot the price like super high, right? Yeah, exactly.
And so when we look at a parabolic top, what you have is lots of long-term hodlers trying to sell their Bitcoin as quickly as possible because they want to realize that value and go and spend it, or start a small business or whatever their life's goals and aspirations are. And I think that's good in the sense that the utility of savings is twofold. One is the utility while you're saving, which is that you are hedging against uncertainty. You are alleviating the anxiety that comes with not having a cushion, right? And so that's the utility of it while you're holding. This was really well described by Hans Hermann Hoppe in an article we can link to as well. The
yield from money held reconsidered.
Thank you,
So I think he was answering W.H. Hart. I think it was a speech, but there was an article of it on Mises. I'll put it in the show notes. Both you and I have mentioned this over the years quite a bit, but go on. Yeah.
It's always worth re-mentioning because I think that we don't get taught this by the Keynesians in college, right? They don't. These are mysteries that have to be unpacked. But the other utility that we cannot exclude from the analysis is that then you can spend it. And with Bitcoin in particular, it being a fixed money supply where you have continued adoption happening, the purchasing power of the Bitcoin is increasing. And then when you go spend it, that means that you're able to spend it and have more purchasing power than you had on day zero when you acquired the Bitcoin. And so you're essentially proving out the whole life cycle thesis of the product market fit of long-term savings by going and then 5 years later rebalancing and spending those Bitcoin. So I don't have like an ideological animus against people spending their Bitcoin. I think that that's fine. Now, jokingly, we might make fun of them, for being lettuce hands, etc. But if you're 5 years in and you're doing it for the right reasons, I don't think you're lettuce hands. I think you're lettuce hands if you panic buy the top and then panic sell the bottom just based on the Bitcoin price in the short term.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold Vault. The Bold Vault is a 2 or 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. Yeah, I think that's a great way to put it. I think the way I understood it as well is the way, our friend Bitstein might explain it is something like, look, I'm saving these coins because I want a spaceship someday in the future. You're trying to tell me to spend now, but I'm saving for that time in the future. So, it really is about what do you want with your life, or do you want to be able to pass down a lot of coins, right, to our heirs, to our children, that kind of thing. One other topic that I thought would be interesting is doing business on a Bitcoin standard, because it seems that basically at scale, very, very few businesses have been Bitcoin profitable. Right. Now, maybe at a smaller scale, maybe if you cherry pick the time frames, Coinbase or early equity in Kraken, maybe some of the Bitcoin miners who survived, right? To be clear, the ones who survived, not all of them, were Bitcoin positive. Is that just here's the way I'm thinking about it. I'm curious to get your reaction. So the way I'm thinking about that is the world is undergoing hyperbitcoinization right now. We don't know how long this process could take. It could be 10 years, 20 years, 30 years, maybe. But because the world is adopting this new money, which we think is the best money, Bitcoin, that it's just incredibly difficult to outperform Bitcoin. If you're running a Bitcoin business and you're trying to earn in Bitcoin, it's just very difficult to do that. Now, maybe that will change post hyperbitcoinization. Maybe, in other words, the CAGR of Bitcoin, theoretically, we would expect it to sort of taper down over time once we've gotten fuller adoption. So I'm curious how you're seeing that. Are you thinking of it similarly, or do you think of it differently in terms of trying to be a profitable business in Bitcoin terms?
Yeah, absolutely. So to your point, there's the diminishing marginal returns of Bitcoin, right? Once we reach 100% adoption, all else equal, we would just expect it to increase in value based on productivity. Now, what I would raise as a question on 100% adoption is, what does that look like from the median person's balance sheet? Today you have people who have maybe 1% of their assets in Bitcoin. Now, they've adopted Bitcoin, but do we measure adoption based on how many people have 1% of their balance sheet in Bitcoin? Because if we do that, then we can reach 100% adoption, but the Bitcoin price will continue to increase when they go from 1% to 5%, of their balance sheet, right? So there's that part of it. And then on the other side of capital and goods, right? Capital goods, meaning businesses, as you pointed out, or factories, et cetera, that are not Bitcoin, that are assets that are not Bitcoin, and that people presumably they buy those assets because they want to earn a return, as you point out. And if Bitcoin's their money, they would want to earn a return that's greater than the return of holding Bitcoin. And there's two parts to that equation. One is, what is the return on the investment asset, right? So how profitable is it? But the other part of it is, how much do you pay to acquire the asset? And I actually think how much you pay to acquire the asset is the critical question in whether you're going to, quote unquote, outperform Bitcoin or not. And so if you pay the kind of today's price, right, which is basically in this world of where people are using investment assets as their savings vehicle because they don't have a good money and they don't have the education to know that Bitcoin's, a good money. The current investment asset prices are too high relative to what they would be in a Bitcoin economy. And so I think that in a fully hyper-Bitcoinized world, the cost of buying an investment asset would be so much less in real terms that that's where you would actually do okay by investing in the asset. Now, I would also add that where the returns really are in how you operate the asset. And so we're used to in this fiat world where you just park your money, quote unquote, in the asset, and then the value goes up due to inflation, and then you pull your money out, and you've done well. Even though you haven't necessarily operated the asset, you haven't improved it, you haven't done anything particularly entrepreneurial. And I think that this is really the case against the capitalist. Would be if we think of the capitalist as somebody who's the passive investor, right? Who's not actually providing any kind of innovation, no hustle, no sweat, no blood, no tears, and is just kind of sitting on the capital appreciation of the asset. Well, I can understand why some people are a little bit skeptical of the fact that they've done well just because the Federal Reserve has lowered interest rates from 20% to 0% over the past several decades, right? And contrast that with somebody who could be, for example, they could be acquiring a company in order to get the utility of the equity, the utility being the voting rights to influence the operations and kind of the governance or whatever it is of the entity of the asset. And so I think that in a hyper-Bitcoinized world, the only reason you would dabble in equity markets would be because you are an operator and you are acquiring the utility of the equity, not that you think that you're going to be a passive investor and do well just by sitting on the sidelines, being a cheerleader, or just checking your brokerage account every month and seeing number go up. So I think that's the biggest difference. Now, it's particularly difficult to look for example, like business ideas in the Bitcoin space itself, because Bitcoin being open source, the whole model, right? If we read the Bitcoin white paper, it's about, let's disintermediate. Let's not have financial intermediaries. Let's not have middlemen. And historically, that's been a source of a lot of businesses. And I think that in a well-functioning economy, there's nothing wrong with middlemen. Like the supermarket that buys from farmers and then sells to retail consumers. There's nothing wrong with that middleman aspect of it. And I think that a lot of Bitcoiners are like, we got to decentralize. We got to have like direct farm to consumer. But I'd argue that's only because the incentives of the supermarket have gotten such that, because of inflation, you've got this shrinkflation, you have this decrease in quality at the supermarket, and now you have to try to bypass them. And that's just a byproduct of the fiat world that we live in. That's not, in a Bitcoin world, you'd have the opposite, where the supermarket is actually performing the function of really forcing farmers to produce high quality goods and negotiating with farmers to get the highest quality goods to stock their supermarket shelves, so that the consumer doesn't have to constantly be haggling and bartering with 1,000 different farms to get what they want. So there's definitely a role for intermediaries. The challenge in open source world is that in a kind of a world of software is that we have this trend towards fewer and fewer intermediaries, in particular in Bitcoin, and in a monetary system where historically there have been a tremendous amount of intermediaries in the monetary system and the payment system. So I think, though, that let's tie it back to Lightning, because I saw somebody tweet that, there can only be like 5 million people on Lightning based on the block size limit. And I'm thinking to myself, well, realistically, there's like thousands of banks. And so if we had millions of Lightning banks, quote unquote, custodial Lightning wallet providers, account providers, that creates a far more competitive industry, a far more, frankly, decentralized industry. And I understand that, it's not fully disintermediated. You don't have every single individual owning their UTXO and the UTXO set. But in terms of getting to a better world than we currently are in today, that's a huge improvement. And that you have the ability to opt out, that you can be your own bank if you want to, right? And if you have the means to buy your way into the UTXO space, which right now is like you pay less than $1 to get your spot in the UTXO set. So I think that in terms of the status quo, we're doing pretty well right now. Okay, that was long and meandering.
Yeah, but let's get back to the, as you mentioned, around businesses and, let's say, fiat multiples, right? As an example today, a typical small business, and look, the numbers will vary depending on the industry and so on, but I would say a typical small business might sell for something like 3x earnings, something like that. And then maybe as you get larger, maybe you might start to get more like, 5x or 8x earnings. And then once you get to like SaaS or these kind of large public company multiples, now you might be like 20x or something like that. And so, some of your commentary earlier made me think about this too, because passive indexing, right? That's a big thing today, right? People are all about not just Bitcoin ETFs, but standard stock ETFs, right? That's like a big normie investment. Just buy the stock ETF. And even without knowing it, there'll be a lot of people who, without knowing it, their super fund or their retirement accounts are doing that too, right? So without knowing it, they already are doing this passive investment, right? So they're complaining about BlackRock and Vanguard and whatever, but it's actually their money that's going into BlackRock and Vanguard. So, but I'm curious, do you think in a Bitcoin standard post-hyper-Bitcoinization that there's still a role for passive index equity investing? Or do you think it's more like, no, just hodl Bitcoin and only hold equity in companies that you're, let's say, more active in, or you have some special expertise or knowledge in, rather than just kind of blindly buying the index like people do now?
Yeah, that's an interesting question. I guess I think that if everyone was perfectly rational, then it would be the latter. It's only active investors. I do think that there are some folks out there who have almost ideological attachment to this idea of owning a productive asset, and also they don't want to be the ones managing it. And so then, they're going to find active managers to essentially invest in them. And, the other part of it too is that you might look at, for example, you might have somebody who's a child prodigy, like Warren Buffett. They're coming out of school. They have a limited amount of capital because they haven't, spent decades saving up in Bitcoin. And then you have this large hodler who's like, oh, okay, well, I'll capitalize your active management. And part of the motivation might be to outperform Bitcoin, but part of the motivation might also be to, see this person succeed, right? Like that is as valid of a motivation, because that large hodler, they might not even care about outperforming Bitcoin because, they're good. They don't need to outperform Bitcoin. They've got the life that they want. But what they want to see is human flourishing. They might even want to see, for example, new technologies. So they might invest their Bitcoin in a VC not because they're trying to outperform Bitcoin, but because they want a robot servant that's going to tie their shoes. It's like, and they don't want to go through the process of finding 100 entrepreneurs and giving each one a little bit of capital to see which one pans out. They want to outsource that to a VC. And so they go find a robotics VC who's going to go do all that work for them. So I do think that there's definitely roles for passive investment where the primary motivation, again, is the utility that they get out of the passive investment. It's not the outperforming Bitcoin part. And I think that's maybe a bit of a nuance, but I think it's an important one.
I see. So I guess with the, let's call it the venture capital, or you want something to exist part aside, you think for the most part, people will just hodl Bitcoin. That there won't be as much of a culture now as of buying passive index ETF investing, that kind of thing.
That's correct. And it's because of the fundamentals of Bitcoin, right? That you can't do a multi-sig with your passive investment. You can't you can't run a node, right? You can't audit their financials in real time. You have to trust them. And so if you're going to go through the trouble of trusting them, I don't think it would ever make sense unless there is some other motivation that's related to, okay, well, I want to manifest something in the world.
Yeah. Yeah, and I think it's going to create a really, for now, it's kind of, there's maybe a bit of a dilemma because you might want to invest and make money, as in Bitcoin terms, but it's just so difficult pre-hyperbitcoinization to actually achieve that. And I know there are people trying that. I know, there are various funds and things like that who are denominated in Bitcoin and trying to outperform in Bitcoin. Now, maybe some of them have like advanced, trading and arbitrage strategies, and maybe others actually intend to invest in businesses and ideally be Bitcoin positive. But to me, it seems like it's going to be a really hard challenge.
Absolutely. And a hard challenge to me is like the other side of that coin is hard work, right? Any, hard work and intelligence can overcome a hard challenge. And so I think that that's what it comes down to, is that like, yeah, there's not an easy way to outperform Bitcoin. All the ways of outperforming Bitcoin involve hard work. It reminds me of this. There's this meme of the kids opening the book and it's like, how to make money. And then he opens the book, it just says work. It says
work. Yeah, and he's like crying because he doesn't want to do work.
Yeah.
But I mean, not just hard work, it's also going to involve risk, because this is entrepreneurial risk. You're going to be putting Bitcoin into a business. And you might be a really hard worker, but you might not have product market fit. You might not have the right skills. You might not have the right team. You might get unlucky. You might get outcompeted. I mean, there's a lot of these things that could come into play. And, there'll be a lot of people who are just rationally like, hey, you know what? I'd rather just hodl.
And in many ways, you're competing with the money printer, right? So if you're like, okay, well, I'm a Bitcoiner. I also work in real estate. So now I'm going to try to find ways to outperform Bitcoin by investing in real estate. I'm only going to invest in the best deals. But guess what? You're getting outbid by somebody who is printing money through, a commercial bank loan, right? And a low interest rate. So there's a complete mismatch there where, no, you should be investing in real estate as if Bitcoin did not exist. And, that's the only way to actually compete in that market. And that's just the brutal reality of it. And then if you want to grow your hodl, what you should do is rather than investing capital, you should invest time, right? So you'd go to the real estate developer who's this fiat guy and you tell him, hey, look, I'm really good at real estate. Let me trade my time for your fiat. And then you go and buy Bitcoin with your fiat, right? Like it's not a super complicated equation. You're fiat mining, right? It's this arbitrage of, okay, well, the fiat world doesn't know about Bitcoin. The only scarce asset that they care about is my time. So I'm going to go trade my time for fiat that I can buy Bitcoin with. And that's just like, okay, that is what it is. The desire to be like, well, I want to invest my Bitcoin. I don't want to invest my time. That's play stupid games, win stupid prizes. In my view.
Of course, yeah. I think it comes down to as well a question of scale as well, because it might be. I mean, if you think about a typical person with a fiat job, they might actually earn more than they spend. I mean, that's a good personal finance habit, right? Earn more than you spend, stack that difference into Bitcoin. So in that sense, you're Bitcoin profitable, but it's at a smaller scale, right? Like if you're trying to do it at a larger scale, at a business level, that's where, larger investments are required and there's now a lot more risk.
Well, yeah and no, because there's businesses that don't require a lot of capital. And so services businesses, like for example, a professional services company like an accounting firm, for example, right. They just don't have big capital investments. And so it really is about human time. And the investment is in human capital. And that's a totally fine thing to now eventually you do build up some equity in that business, and maybe it makes sense to sell that equity to somebody else who doesn't value Bitcoin, and then now you can go and take the equity of your business. You can dump your
business bag and flip it into Bitcoin, and yeah. But I guess again, that's always the challenge because we're not trying to time the market, but effectively that people are going to get into this kind of situation right now. Maybe not now, but later in the cycle, right? What typically happens is you might get people who are like, "Oh, hey man, I'm about to sell my house. Should I just put it all into Bitcoin?" Right? And then you're kind of like, well, none of us knows what's going to happen to the price. It could drop 70% from here, right? It's had 80% drawdowns before, multiple of them. So you should be wary. So, not trying to time the market or anything, but there are going to be some hard decisions for people to hold, right? You might have spent this time building up this equity in a business and realize, oh, wait, I'm still not going to outperform Bitcoin. And I would have technically been better off selling that business to buy Bitcoin and just hodling that because Bitcoin is doing whatever, 50% a year or something like that.
And then it comes down back to the utility of holding the equity, which is that do you want a third party telling you how to run your business? Because if you sell the equity, you're going to have somebody telling you what to do. And so maybe you would experience tremendous disutility from that happening. And so it just makes sense to keep that equity locked up and then to take the free cash flow and to reinvest that into Bitcoin. Maybe even go to the bank and say, hey, I need a working capital loan for my business. Okay, now you're able to take more cash out of your business and buy more Bitcoin because you have the bank financing your working capital. And so there's definitely ways of, saving in Bitcoin while keeping ownership of the business. And you could even go the Michael Saylor route of actually putting Bitcoin on the business's balance sheet and selling the equity in a non-dilutive manner. There's lots of different approaches to that. But essentially there's always the bag holder, right? Which is the fiat guy who doesn't understand Bitcoin, who's willing to lend you the fiat, right? Either because they're creating it, like the bank does, or because they have it saved up and they don't feel comfortable buying Bitcoin for whatever reason. And so that's where I'm like, well, we're still very early. And some might say, hey, look, from an ethics perspective, you should be trying to educate them on why they should be buying Bitcoin rather than taking a loan from them and you buying Bitcoin and you taking advantage of the information asymmetry involved here. And honestly, like we're 15 years into this, this person has heard about Bitcoin. If they have misconceptions about it, if they don't understand it, they're welcome to ask questions. They're welcome to dig into it. All the information's available for free on the internet. I don't really feel like this is an area where there's tremendous moral hazard of, hey, you're taking advantage of this person's ignorance. Bitcoin's the most transparent system in the world. This person is they're being stubborn, right? So they're closed-minded, or or they've been misinformed by a journalist. And that's where I'm like, well, now the immorality is on the journalist who fed them wrong information about Bitcoin. So let's focus on that part rather than the part of me investing my time to undo their misinformation.
Of course, and I think it's fair to point out as well. I've been saying this as well, that when you first get into Bitcoin, you often want to try and save people, and then later over time you realize you can't save most people, and of course, be patient and try to help people who are willing to to learn, but there's just an element to which you just can't save them. And so you have to just kind of let people learn when they're ready. And I think, that's why to me, you're not scamming that person. Maybe they're just not ready yet.
Yeah. And keeping the focus on the people who are ready. Right. And so, and I think your podcast does a great job of this, of educating the people who are open-minded and who are on this journey to learn about Bitcoin, rather than trying to force people onto a journey, right? Or it's really, and I'd also point out that there are so many people who are interested in Bitcoin and are learning about it that I don't think that is like the bottleneck in terms of Bitcoin adoption. I think that the middle of the funnel is the bottleneck of, hey, let's get people good information like you're doing with your podcast. Let's help educate those who are on this journey. And that way they can get set up, for example, on a multi-sig hardware wallet such that they feel comfortable going from 1% in an ETF, a Bitcoin ETF, to 2% on their Coinbase account, to 5% on their River account, and then to 10% self-custodied on their hardware wallet. Like that journey, there's no shortage of those people, right? There's an abundance of that, and it just makes a lot more sense to pull on that string rather than to push on a string of somebody who's just like closed-minded and they just want fiat investments and they're going to do fiat investments and to the benefit of the Bitcoiners who are accumulating at a lower price than they otherwise would if that was not the case.
Yeah, you make a great point about how early we are and who we should be focusing our efforts on. I'm curious, I think you'll have an interesting view on this. What kind of cultural changes do you think we will see on a Bitcoin standard, right? Like some of us believe that it's going to be maybe more family oriented, right? Or even like the birth rate thing, right? Elon and people are talking about how the birth rates are collapsing around the world. I mean, that's just one example, but I'm curious if you have any other ideas on how society and culture will shift as we move to a Bitcoin standard.
Yeah, absolutely. So when we look at it from the personal finance perspective of, okay, you have somebody who's living paycheck to paycheck. Because of inflation, they are incentivized to go and spend their paycheck, over that 2-week period. Let's assume that They're not investing or whatever. And then they learn about Bitcoin. They get orange pilled. They're listening to Michael Saylor, and they're like, okay, I want to start saving Bitcoin. They've got two paths. They can either increase their income, negotiate with their employer, go out job hunting, go interview, improve their personal skills, invest in their human capital, sell their time, as we were talking about. The second is spend less. So, they might have been living a modest lifestyle, but they might have still, bought a car that wasn't the least expensive car. Right? They might buy coffee that's not the least expensive way of buying coffee, right? So they instead of buying coffee beans and grinding them up and roasting doing a pour over, they might have been going to Starbucks to buy their $5 latte. There's an endless list of these. In particular, examples of wasting money or opportunities to save more money would be what some might describe as immoral behaviors, sinful behaviors of, buying alcohol, right? Gambling on sports, buying lottery tickets, right? So if Bitcoin helps them to spend less on materialistic pursuits of varying degrees of, bad, spend less on that, so that they can save more in Bitcoin, I think it creates a vacuum in that person's life. And so then that vacuum, I think, gets filled with spirituality, right? Because now, instead of drinking, maybe they spend time, at the extreme example, in AA, right? But in a less extreme example, maybe they find a way to work on their emotional problems instead of bottling them up, and they go and they meditate, right? Now, so that gets them down this path of spirituality by reducing the amount of materialism in their life. So if you go down that path, then I do think that eventually you end up in a society that indeed is fundamentally transformed, where it's no longer one of, or it's less of instant gratification, it's less of individualism, frankly, and more of transcendent mindfulness and, thinking about other people and fixing relationships rather than breaking them or sabotaging them, and less on self-indulgent kind of hedonism of drugs, alcohol, etc., gambling, whether it's gambling with sports or gambling on the stock market, etc., and more time spent improving oneself, and of course, in prayer and building a family, and self-sacrifice, etc. So I think that's how Bitcoin incentivizes a macro improvement in society from that perspective. And I think that gets twisted into a controversy on Twitter of like, oh well, now you're trying to like get people to improve their lives. How dare you? And we should celebrate people sabotaging their lives, and I think that's fiat. So I reject it. I hope that answers your question.
This show also brought to you by Nomad Capitalist. Nomad Capitalist is a leading provider in terms of offshore tax and lifestyle strategy planning and implementation. They can help you go overseas and legally lower your taxes. As many of you know, I grew up in Australia, but I left. I was sick of it in terms of the taxes and the COVID tyranny and all these other things. And so that's why I left, and now I live in Dubai. But that's not necessarily the place for you. You have to think exactly what works for you, for your family, for your business. And Nomad Capitalists have worked across dozens of different countries. They've helped people get passports, residences, bank accounts, and all kinds of other things. And importantly, it's not just about choosing one place. It may be multiple places. And it may be also about making the pieces fit together in terms of how your business fits with your family and you as an individual. Nomad Capitalists have helped many, many people in terms of going overseas. And if you're interested, go to nomadcapitalist.com/apply. This is applicable for people with a net worth above $1 million US. That's nomadcapitalist.com/apply. This show brought to you by Mempool.space, the world's leading Bitcoin visualizer. And now they've got an accelerator program. So if you have a transaction that you sent at a fee that was too low to get confirmed, now you can fix this with the Mempool accelerator. The way it works, you can go and search your transaction, scroll down, click accelerator, and you don't need an account. You can pay with Lightning, and then it'll show you it's now in the process of being accelerated, and then after a few minutes, it's confirmed. And so this is a great way to help you out if you are stuck. And this can happen where maybe your wallet doesn't have RBF or CPFP, or it might help you in situations where it's impractical to go and re-sign. So for example, multi-sig with keys in different locations. And thirdly, even in some Lightning scenarios, perhaps a forced close, you might not be able to use RBF. And so in this case, the Mempool Accelerator can help you out. So keep it in mind, and you can find out more over at mempool.space/accelerator. And now, back to the show. Yeah, I mean, and the funny thing on Bitcoin social media, sometimes the social media discussions, they end up being a discussion about, you know, people trying to attack each other for various lifestyle choices, whether that's, you know, the carnivore diet, or, you know, whether somebody wants to go be a feminist or a whatever, or someone else who wants to have, like, is more family focused, let's say. I think we will see the trend towards thinking about your longer term, as opposed to sort of just doing what feels good in the here and now. And I think that's just going to be a general trend we will see. You know, again, it comes back to an Austrian argument as well around high time preference versus low time preference. I think we will start to see more low time preference behaviors. You know, I think we will start to see governments shift as well. And it's an interesting point you raise as well around, you know, some people have this big misconception about libertarianism, meaning that you should sort of be pro-hedonism or pro-anything goes, when it's like, no. Most of us, or depending how you view it, but I think most of us see it more like, no, it's a specific theory of private property rights and the NAP, but that doesn't mean there's not a role for social judgment or things like that if somebody's making, you know, bad life choices. I guess that's how I'm seeing it. Whereas I guess the common confusion is that, oh, you're a libertarian, why aren't you in favor of people just doing all kinds of hedonism and short-term behavior?
Yeah, I think that where I break with essentially with conservatives is that they do want to make those behaviors illegal. And to me, it's the reason why you don't want those behaviors to be illegal is, first of all, you know, people need to have their free will. So I think that that's really important. But furthermore, you know, free will means that you get to choose between good and evil. And I think that sometimes it gets lost that they're like, oh, well, on the moral relativism side of the equation, they say there is no good and evil. So you have free will and you should just choose whatever you want to choose. But there's no, we shouldn't be allowed to talk about the truth of, and I'm not even saying pass judgment. I'm not even saying to shame someone. I'm saying that just to speak the truth, that this behavior is good. This behavior is bad. And, you know, you might be doing that bad behavior for lots of different reasons. Not here to judge, not here to tell you, you know, you're a bad person, just here to speak the truth about that behavior. Here are the outcomes of that behavior and why it's bad. But you know, conservatives are like, well, we should just make that bad illegal, and then that way we can solve it. I think that you drive it underground. You potentially you make it worse, right? You know, you got this fentanyl epidemic because now you've got all these drugs that are illegal, and so you don't have. I don't think that's the right path to go down. It doesn't solve the root cause, right? The root cause of the behavior of, or essentially of somebody's free will choosing the bad path. I think that that's due to a lack of moral clarity, a lack of truth speaking in society, and that the way, you know, to address it, a much more constructive way to address it is through the incentives, right? And so by fixing the money, right? Fix the money, fix the world. And that's where I'm like, okay, well, it's not so much that I want these behaviors to be illegal. It's that I think that Bitcoin will help reduce the presence of these behaviors, and that we have to be clear that that's a good thing. And that's one of the reasons why we're excited about Bitcoin, and that we're, you know, we want to see more Bitcoin adoption, is to see more good in the world and less bad. And that it's not the case that we view Bitcoin as, oh, okay, Bitcoin's good because it's censorship resistant, so you can engage in more behaviors that are evil. And so it's harder for people to stop you from doing bad. I don't think, like that is, it is true that Bitcoin essentially does allow for it to be easier to do evil in that sense, right? Because of its permissionless nature. But we have to zoom out and look, okay, on net, is it going in the good direction or the bad direction? If Bitcoin on net was going in a bad direction, I would not be happy about Bitcoin because, frankly, I have kids. Like, I want to live in a better world. It has to be the case that I think that if we give people more freedom, including the freedom to save money, that because of the fundamental goodness of people, even though we live in a fallen world, and we can get into a theological discussion about sin and the limitations of humans, but we also have to talk about the goodness that is in humans, and that if we enable people to make decisions about, do I want to spend my money on sports gambling because I think life has no meaning, and if I save dollars, that my dollars will be worth less anyway, versus, hey, do I want to buy Bitcoin and be self-sovereign and run my own node, hold my own keys, and be empowered? That the outcome will be a far less crime, far less evil in the world, and also it might lower the time preference of criminals themselves. Criminality has been analyzed by economists, right? So it's not like criminality is just purely like, oh, this person's a psychopath and that they're committing this crime. There are crimes of economic destitution, of that they don't feel like there's any better way. If we set it up such that we lower the cost of capital, right? We were talking about the now somebody might feel like starting their own business and being independent is far more accessible by engaging in voluntary trade rather than engaging in involuntary trade of theft. That I think that it'll reduce the amount of crime in society. I don't think I have anything else to say there.
Okay.
But...
Well, one other area I'm curious to get your thoughts on, because it's it's quite topical now, is government adoption of Bitcoin. Right now, in libertarian circles, I guess, or depending on your view, there are some who would say, think about the Murray Rothbard, do you hate the state sort of answer, and there would be others who see it more like, well, if the state adopts Bitcoin, then maybe they'll be a little more open to letting their citizens hold Bitcoin too. Now, to be clear, there will be some states who hold Bitcoin and ban their citizens from holding Bitcoin. And there will be some who might argue that, the state can do evil. Now, while I guess where I'm seeing it is, while I think, ideal would be if everything was privatized, but in practice, what we're probably going to see is a world of maybe smaller states, maybe some monarchies, maybe some free private cities, and we'll see lots of smaller states, and that's kind of in practice what we might end up getting. But I'm curious, any reactions you have on the question of whether a Bitcoiner should, especially in your case as an American, should a Bitcoiner support the state to acquire Bitcoin, or should it be seen as you don't want the state to have Bitcoin?
Yeah, I think it's very simple, which is that does them acquiring Bitcoin move them more in the direction of being a state? That is, that are they increasing their monopoly on the use of violence, or are they decreasing their monopoly on the use of violence? And are they becoming less of a state and more towards what you described of essentially libertarian governance of private cities, private monarchies, whatever form that takes? And I think it's quite simple. A government acquiring Bitcoin moves them away from being a state in kind of the Rothbardian definition of a state, and more towards being a private entity in an anarcho-capitalist world, because they don't control Bitcoin. So they are not sovereigns over Bitcoin. And this isn't just me, the crazy anarcho-capitalist, saying this. This is Larry Fink on national television saying Bitcoin is above governments, right? It just is. And so when a government is adopting Bitcoin, they are fundamentally abdicating their monopoly on the use of violence and ceding it to the nodes, right? The nodes are the ones that use violence. And really, we're talking in a very metaphorical sense here, because when they reject an invalid block, that is the use of violence, right? In this context of governance. And so now it's decentralized because anybody can run a Bitcoin node. But I don't think there's any ambiguity about whether it's good for governments to hold Bitcoin or not from a libertarian perspective. Because of that philosophical question of, does this make them more of a state or less of a state? And we should always want them to be less of a state. And if they're abdicating the monopoly on the use of violence and ceding it to a non-state decentralized network, it's unambiguously good. I really don't understand the
I see.
controversy.
So let me try to steelman it for a second.
Yeah,
here.
please do.
So as I'm reading you, it's maybe the argument would be they might become very powerful in the short to medium run, but in the long run, they are ceding monetary authority in a sense, right? So as an example, the US government has, 200,000 coins or something like that. Something similar to the size of MicroStrategy's stash of coins. But it could theoretically make them very, very powerful in the short to medium run. And, if it's a very bloodthirsty, warmongering state, they could use those coins for evil. Maybe that's the steel man.
So I think that essentially the question has to be ring fenced, because should a libertarian be opposed to a government using Bitcoin to inflict to violate the non-aggression principle? Yeah, of course we should be opposed to that. But that is a separate question in my mind. Now, maybe there's a connection of if they are holding Bitcoin, then they are more likely to do that. I would argue they're less likely to do that. And so to go back to the initial question of just holding it in a vacuum, right? I think that is one question. And then the second set of questions is, what effect does holding Bitcoin have on their set of incentives? Because so on the first question of just holding Bitcoin, even if they continue to do everything they have been doing historically, they are still implicitly, at the very least, ceding monopoly. They are they're
giving up the scenerage, right?
Yeah, they are kissing the ring. They are bowing down to Bitcoin. Just by holding one Bitcoin, that they are doing that, and that they are bending the knee. And so I think we could stop the analysis there, but if we continue the analysis, we have to look at, okay, well, now what are their incentives when they're holding Bitcoin? This is where, so I listened to George Selgin on Laura Shin's podcast, and his argument was that the government or the state, whatever terminology we want to use, should not hold any amount of money beyond their immediate needs. That the government should be hand to mouth, paycheck to paycheck, right? You don't want the government ever having a reserve of money. It should be taxes in, taxes out. And I think that would be a fine analysis if we're looking at it in a world where there is no private money like Bitcoin. Now we get into debates about what is private money, but there is no market-created or market-adopted money like Bitcoin. If we're just talking about fiat currency, then I agree it's a little bit absurd for them to say that they have $100 billion of fiat, because they have an infinite amount of fiat.
They can just print more, yeah. It's not a big deal.
Their fiat reserves are always infinite. So George Selgin's analysis, I think, kind of falls apart in the fiat world, where you can say, oh, they shouldn't have any reserve of money, but they have an infinite reserve of money because we're on a fiat standard. So already they are admitting the need to have a reserve. Otherwise, we would have some kind of fixed monetary policy, right? That there would be no elasticity of money. The other piece of it is, okay, how much Bitcoin should they hold, right? And I think that this really goes back to our personal finance question of alleviating the uncertainty about the future. I think that the future is always uncertain. I think that there's a tremendous amount of uncertainty. I think people misprice uncertainty, right? And due to fiat, and that under a Bitcoin standard, the total money held would be, we can't wrap our minds around it as people who live in the fiat world today. It's astronomical, the amount of Bitcoin that will be held relative to the value of goods and services and of capital goods in society. It will just eclipse it. And the meaning that the real purchasing power of the UTXO set will be many multiples of what's available to buy by so many orders of magnitude that we can't wrap our minds around it, because we just don't understand the amount of uncertainty that needs to be hedged out there, because it just hasn't been hedgeable in the past. So meaning that if we're thinking about, okay, the more Bitcoin a state holds, the less of a state it is, right? If we can accept that part, I think that then that removes the libertarian morality question of should they hold Bitcoin or not. And then it also removes, are they holding too much Bitcoin or not? Because, it's always good to hold more Bitcoin than less. Then it's really about, is the state planning, is it central planning, right? Of, okay, they're trying to figure out how much uncertainty there will be over the next decade or century or millennia. And if this entity is really about like the long term, right? Of, we need to be thinking about the long term. So I see holding Bitcoin as the opposite of central planning, because essentially you're maintaining neutrality about what the uncertainty will be. So central planning is, well, we're going to build nuclear reactors because we think that's going to be the best technology. And so that's why we're buying nuclear reactors. If you say, well, we're going to hold Bitcoin, it's not that you're saying that Bitcoin is the best savings technology. That's already established, right? And it's saying that we don't know whether nuclear reactors will be the best investment or not. And we're going to let the private sector figure that out. What we're saying is that when we look at the functions of the state, and I think this is where there's a serious libertarian argument, maintaining the territorial monopoly is the big uncertainty, right? So how much do we need in resources to maintain the territorial monopoly? Historically, the way they've done this is by maintaining a standing army instead of holding Bitcoin, such that in a crisis, you could stand up an army very quickly and possibly even bribe the attacker into not attacking, right? Lots of negotiating. I thought, I'll leave that to the statesmen, the people, or the statists operating the state. But from a libertarian perspective, I would argue that it's a question of, well, would you rather, it's a lesser of two evils. Do you want a standing army, or do you want them to hold more Bitcoin? The other pragmatic argument would be to say, hey, look, there's no way for the state to hold Bitcoin other than by individuals. So this is where we get into the
principal agent problem,
agency principal problem.
Yeah.
And I think that when you start having individuals hold Bitcoin, even if it's in a multi-sig, they're no longer thinking about what's best for the state. They're thinking about what's best for themselves. And you've privatized the state through a back door of holding Bitcoin reserves. And so I think that it goes beyond just the state is bending the knee to Bitcoin. I think it's that through a you've done a management buyout of the state, where the insiders now, instead of operating a public entity, quote unquote, this territorial monopoly, now they operate a private entity that is a government that is privately controlled. Now, people point to like the deep state as being this already, that there's already actors who are already operating the state for their own benefit. And so, the state has already been privatized, and that the problem here is not so much a libertarian question as like a control question of these people are still taxing. And that's where we veer away from the question of how much Bitcoin should the state hold in reserve as the question of taxation with Bitcoin. Because taxation with Bitcoin, my view is that it becomes orders of magnitude harder to tax Bitcoin than to tax fiat. And maybe we leave that for another episode as we get into Joe Rogan territory.
Whole rabbit hole, right? Yeah. But I mean, I guess one other question that comes up here for me, and I'm mostly with you here, but there's one point that kind of, I still do think there's going to be risk that if, a very warmongering state has access to all this Bitcoin, that they could use it to go and do all these wars and destruction. And it's going to be cold comfort if we said, oh, hey, we were against the state doing that war. Well, I mean, they find ways to propagandize and get the population to support war anyway. But I will say this, that most of the governments around the world are in a lot of debt. So they clearly have an issue being profitable. Right? They just spend more than they earn in very simple terms. And so even if a state has Bitcoin, it's unlikely that they will hold it for very long if they are very spending and if they spend like drunken sailors, right? And so I think that's also an interesting point if we think about the state of government debt around the world, especially in the US government, where I think the last stat I saw was is it like $3 billion a day is being paid in interest or something ridiculous. And so it's really quickly running away. And so even with 200,000 Bitcoin, they may not be able to make that difference up.
Yeah, and I think that's part of what changes their behavior is that they realize the scarcity element, that if they spend all these Bitcoin on a war, they don't have any left. And they would have to find a way to either seize more Bitcoin, which, by the way, it's non-trivial, right? They've kind of gotten lucky. And I'd say it's going to get harder and harder as people learn to better secure their Bitcoin. Now, obviously, I don't want criminals to secure their Bitcoin very well. I wish criminals would, lose their keys in a real boating accident. But short of that, I mean, I don't have a problem of, if somebody is a murderer and the state seizes their Bitcoin, that seems like in the same vein of the state arresting them, is a libertarian opposed to that? Generally not. That's fine for the state to arrest an actual murderer. So yeah, they would still have to get the Bitcoin. They could tax, right? But I think the bigger question though is not even so much kind of these consequentialists like far out. Okay, if this happens, then what? It's a much more immediate question of, does this accelerate Bitcoin adoption today?
Right.
And to have Donald Trump on stage saying the US government should hold Bitcoin and that we should never sell Bitcoin, that influences millions of Americans into thinking, well, if he thinks it's good for the state, maybe it's good for me. And so that level of influence, I think that is the much more pragmatic question of, is it good to advocate for a strategic reserve? Well, yes, because then it raises the question of whether you should buy and hold Bitcoin from a personal finance question to a public political question, which then leads to lots more conversations that will ultimately lead to more Bitcoiners. So I think that that's kind of the biggest argument in favor of us being involved in politics and advocating for this.
And I agree with you there. I think you're right. I think ultimately getting more people to adopt Bitcoin as their money, as their savings technology, it's a good thing for the world. So we should do that. We should advocate for that. I think it's a great spot to finish the episode. As always, really enjoyed chatting with you, Pierre. Listeners, find Pierre on his X account at Bitcoin Pierre. Pierre is the VP of Research at Riot, and of course, we'll link to your tweet as well with the research you did.
Yeah, I also want to shill the Block Time podcast produced by
great.
Riot.
We'll put that,
we do deep dives into a lot of topics that might be of interest to your listeners. The latest one is about The Economist ran an article full of false information. So we do a deep dive into that using data to show how The Economist is wrong. So I hope your listeners will tune into that.
Yeah, fantastic. I'll find that. I'll put that in the show notes. Pierre, thank you for joining me today.
Thanks for having me on, Stephan.